name is Adam Pearl and I'm a currency strategist at Dodgit.com. I would first of all just like to welcome everyone to our chart analysis video, one that we're going to be doing on an every other day basis. We're going to post a video on the website. You'll be able to catch it on the website. What we're going to do in these analyses is we're going to basically be analysing the Forex and stock market, focusing on different charts in each video. Unlike other videos on the net, what we're going to do is take you through the basic steps and give you a perspective of different scenarios that we're looking at. As you can see now, we're looking at the Euro-US dollar chart. It's a daily chart. We can see it right up here in the corner. And from what I'm looking at is that the price pattern has really flip-sided over the last couple of months. If we just had a few trend lines like this, we can see that first of all we broke this long downtrend that we've been seeing since July. Actually, if we analyze it a little bit more closer, we can actually see that since the end of October towards the beginning of December, we were actually consolidating around this area. So we've like really broken up towards the end of the year. Most traders are classing this as a end of year rally. We really rallied up to the 1.47 mark, and now we've started to retrace back a little bit, and we've actually broken the 61.8% Fibonacci level. What I'm going to do is I'm going to just bring it up on the chart just like this. What we're using the simple Netdanya chart. I'm sure most of you are either using MetaTrader or other charts provided by your brokers. What we're going to do is in these type of videos, we're going to just use the basic charts. We're going to show you what we're looking at. So as you can see, the chart, the price pattern has actually broken the 61.8% level, which actually I was expecting it to hold a little bit longer around that level. We can see it's broken down. Now it's heading towards this support level. We can see that here it acted as a resistance. So what we're going to probably be looking at is a little bit of consolidation pattern around this area. We might be able to do a few hedging positions around this area between the 1.3 level, 1.3100 and the 1.34 level. We might be able to do a few hedging positions. Obviously, if we're going to break this level, this support level, which once acted as a resistance, probably going to head much lower. We're probably going to head down towards this trend line, probably test it. I am hoping actually that we're going to start to retrace a little bit higher. I'm hoping that we might be able to reach the 1.37 level in the future. Obviously, all really depends on the central bank, the European Central Bank's expectations, what they're going to be doing with their central rate, if they're going to continue to lower it or not. At the moment, the situation in Europe, in England especially, doesn't look that bright. So yeah, we could be seeing some further rate cuts. At the moment, the markets are pricing in some further rate cuts. We're just going to have to follow that and see what happens. Moving on, we're going to go over now to the pound against the dollar. The pound against the dollar is looking really bad at the moment, and let's just bring it up like that. Can see, let's just zoom in on this chart right here. Zoom in like that. We can see that we're still in this downtrend. We received some type of stability around this area. I thought the chart had formed a triple bottom pattern, but doesn't seem to be holding. We're still consolidating around this area. The traders are expecting further rate cuts from the Bank of England, but it seems like investors are already pricing those in because we're not heading lower. So that's something that we've got to take into consideration. We have got this upper resistance level just around here. It's a daily resistance. We can see we came close to hitting it around here. Here we broke through, but it was a kind of false break, and we've got this resistance around here. We've also got minor resistance levels around this area, and we've got support around this area. So we're kind of like ranging at the moment. What I would advise, just some hedging positions. Nothing that serious, day trading, in and out kind of stuff. That's what I would recommend at the moment. If we move on to our last chart, which is the dollar against the Japanese yen, We can see that also we're in this downtrend, major downtrend. This is a really downtrend scenario, case scenario we're looking at the moment. But if we look carefully at the chart, I'm going to just zoom in on this chart also, you know, to recent price movement. We'll be able to see that we actually broke, and we're now testing this downtrend line, which is really interesting. We've received quite a few bearish days, but we still haven't gone below this trend line, which is now actually acting like support. So that's something that we have to take into consideration. We also have to watch out if the price action of the dollar against the Japanese yen is going to form a higher low. What I mean by that is we're gonna form a higher low, which is higher than this previous low. So that's something also we're looking at. And, you know, obviously, if we're going to form a higher low, we're going to head higher. So we might be looking at a change in trend. At the moment, this chart, the dollar against the Japanese yen, is actually, you know, it's one-on-one like the stock markets. So, you know, we're looking at the stock markets. If we're going to see higher prices, we're going to probably see here higher prices. If not, probably going to see, you know, lower price movement. That's about it. So again, my name is Adam Pearl. Thanks for listening.